Yo, what's the dealio, man? Listen, you already know what time it is, right? You know I got a banger for you. So check this out. This is going to be a little twofold video. First little quick half, I want to talk about something. Second quick half, we're going to talk about rolling orders, okay? Rolling orders. I haven't talked about this before yet. What is rolling order? And then how do you do it? And when is the best time to do a rolling order or roll an actual order, okay? So, before we get into this video, I want to say this, y'all. Start paying attention to the description box, all right? This Wednesday, we doing Wisdom Wednesday live, okay? I'm going to do it at 7 p.m. Eastern, 4 p.m. Pacific. So if you want to be on live, I'm going to go live and we're going to do Wisdom Wednesday on live, all right? And then we got the small account challenge. We about to kick that off, okay? Somebody asked, am I going to be calling the plays inside of the Discord? Yes. I'm going to be calling those plays inside of the Discord. So if you want to grow a small account with me, then be sure to join the Discord right there. We're going to do this thing for a whole year, okay? So I just want to say be sure to pay attention to that description box, right? Because anything that we got going on, it's going to be in the description box to kind of figure out, you know, where to go, all right? So that's what I wanted to say to that. So the next thing I want to say is yesterday, I called Tempest. That was on my watch list, right? Right here I said Tempest could have a parabolic move to the upside, right? They close inside of the supply zone on Friday. If we break above 75.71, enter calls because that will mean that we broke through supply zone and buyers are going to push the stock up to $80, okay? Now, look at this right here. 77.96 and it's only Monday. Right? It's only Monday. Listen, we call these plays at a high level. All right? If you are not taking advantage of these trades, these stocks, these plays that I'm giving you, what you doing? Right? I'm giving you the levels. All right? So we got a couple more dollars to go to $80. It might come back down and then retest and then it'll bounce back up, right? So that's what I'm looking for Tempest to do. So I just want to talk about that real quick. We call bangers, yo. We call straight bangers every single day, every single week. All right. So with that being said, we're going to talk about rolling orders, right? So rolling orders. What is rolling an order? All it is you're adjusting your strike price or your expiration date, right? Let's say that you get into a trade, and I got into a order in one of my Webull accounts right here, and so one of my trading accounts, and so I'm gonna go to that and show you guys, but I want to break down what it is, right? So let's say you get into a call, right? Let's say you get into an Apple call, and it's Tuesday, right? And your expiration is this Friday, and you expect Apple to go to 220, and right now Apple is at $210, right? So Apple's at 210, you expect it to go to 220. And then you see that Apple it's Wednesday, let's say it's Thursday, and you see Apple is at 211. And you like, I know it got a big move. What you can do is you can roll your order, right? So you can get the same strike price at a different expiration date to just give yourself more time. And the way you do that is, so let's say you got, each contract was $100 and you got $1,000 in this trade. So you got 10 contracts, right? Okay. All you do is you just take the amount that you're up in that trade, it'll close it out, and then you will buy the new expiration date and the strike prices contracts, right, at the current price, and that's it. That's it. But those profits are going to go towards your rolling of the contracts. Now, let's say you're down in a trade and you still need more time on this contract. It's the same thing. Let's say you got $1,000 in the trade, right? You got $1,000 in the trade, and then you're down $300, right? So now you got $700 left. That $700 would go to the new contracts that you're going to roll over. And the good part about rolling orders is you have fresh contracts. So if let's say you roll the orders and then the next day the stock makes the move, those contracts are going to be up way higher because they haven't been decayed. Okay. So check this out. Right here, I'm going to boom. All right. So right here we got one of my Webull accounts, right? So this is IWM. I just got into a contract. It was $3, right? Just to show you guys what's going on here. So we got a $3 contract. Now, right now it shows that I'm down 16%. This is a same day, 0 day to expiration contract, right? The market is closing in an hour and a half, so I don't expect this to do anything. This is literally just for the purpose of this video, right? So let's say I'm in here. And right now, IWM is at 228.06, right? And let's say I'm like, I think that we about to hit 230, but my contract expires today. I think that we gonna hit 230 by Friday. So what I would do is, I would go to sell to close, and then I would go right here to create rolling order. You create the rolling order, and then what you can do is you can choose the same strike price or different. You see right here where it says sell to close, right? You're gonna be selling to close your current position, and then you're going to go to a different expiration date. So let's say this Friday would be the 22nd. Monday, Tuesday, Wednesday, Thursday. This Friday would be the 22nd. So let's say you would go to August 22nd, and then you would choose your contract, right? So because I'm down 50 cents in my current contract, I have $2.50 left. That's my credit, right? So that would be applied to this contract that I'm rolling over, right? So whatever you're down, that's gonna be the L that you take on the current contract, and then whatever you have left over that you still have left as your contract, what you're gonna do is that's gonna go towards the buying of this new contract. So like I was saying, the amount that you have left over is gonna go towards your new contract, right? So right here, we got it. I have this contract, and let's say I want to go to August 22nd, so I'll go here, and then let's say I want to get the 229 calls, let's just say, right? So I enter in there, all right? And then you see at the bottom it says buy to open, and that's new. So I'm gonna sell to close my current position. The amount that I have left over is gonna go towards buying of the new buy to open position. And then from there, if there's any more left over money, what's gonna happen is it's gonna come out of your buying power, right? That's how that goes. And then you go and click on next, right? And then boom, right here. And it's that simple. And then you buy the order, and that's it, right? Don't let this complicate things, right? Don't try to make this bigger than what it has to be. That's what rolling an order is, and that's how you want to look at it, right? That's how you want to look at it. So when you are in a trade, and you may say, okay, I'm in a trade and it's Thursday, and I really know this stock is going to go here, but I need more time. I'm only down 10%. You can roll that contract for the next week or 2 weeks later. Instead of you taking a full L on that position, you're just rolling your money into a contract that has further out expiration, and then that's it. But you're still going to, if you're down in that trade, that will still be given back to the market, right? But you're rolling in the remainder of your contracts, your value into this new contract, and it's going to be fresh contracts as well. So what if, let's say you have a contract and it's out the money. Like, let's say it's out the money kind of far, and the contracts aren't moving the way you want them to. You can literally just roll a contract or roll an order into a better contract. Let's say it was 2 weeks out. you can keep the same expiration, but just get a closer to the money contract, and then you'll be good there, right? So you want to use rolling orders strategically. Maybe you need more time. Maybe you got the wrong strike price. Maybe you got the contract is moving a little bit wonky, right? Maybe you got, data, you forgot that there was data coming out, and you want to make sure that you have enough time on these contracts. So before the data comes out, you get an extra 2 weeks out just so the contract won't decay, right? There's a lot of different ways that you can roll contracts, and there's a lot of different reasons and strategical reasons that you can roll contracts, right? So I just wanted to make this video so that way you guys knew about rolling, because I remember I rolled contracts before a few times and I didn't fully know. Now, what I will say as well is, let's say you're in a swing trade and you're down 80%. I wouldn't roll that contract, right? Because you're down so much. I would just take that L and get my money back elsewhere, right? But I wouldn't roll that contract because it's already burned at that point, right? You want to roll contracts before you're down 80, 90%. Every now and then you may be in a position and it may be down that amount, right? Depending on when you got in, what happened in the market, stuff like that. These things do happen, but I wouldn't roll a contract or a position if I'm down 80, 90%, right? So, and also, let's say you went light in a position. You can roll a contract with more contracts into a better contract, right? So, and that you could look at rolling as a way of averaging into positions depending on how you're looking at it and where you're at, where the P&L is at with that position as well. So that's how you roll contracts, and that's how you can use contracts to your benefit. It's not something that I do every single day. A lot of times I like to be in trades and be out of trades with my day trades and my scalps, right? But swing trades, every now and then that may happen. You may need some extra time. You may have went a little bit too soon and realize, okay, I need a little bit more time, and that's when you roll it. You could be up 5% and be like, oh, okay, I do need some more time. So then you just roll that position and you're good to go. All right, but I wouldn't make rolling like a super habit, because let's say you roll a contract 2 or 3 times, that could become a money pit, right? So you still want to make sure you're trading properly, you're using proper risk management and all those things. But if you do need it, it is there as a tool for you. All right, so I just showed you how to roll on Webull. You can roll on Thinkorswim as well. You can roll on Robinhood also. So you can roll on all the brokerages. So if you need to use that, then feel free to use it. All right, but I hope that this video made sense, and I hope that it helps you out as well. All right. We got Wisdom Wednesday. On Wednesday, we're going live there, and we got the small account challenge. It's going to be kicking off real soon, all right? So stay tuned for all of that. And like I always say, make sure you get up out of your head and go get into this world, because your head is a dangerous place to live, all right? And also remember, the more you study, the less you worry, all right? I appreciate you guys' time. I'm going to see you guys on the next video. Y'all stay smooth, all right?